Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everybody. Hope everyone is doing well. It's been a good week. I'm pretty stoked about what we're working with this week, and awesome as always to see everybody. Good morning. Good morning. All right, so you know what? Let's get into it. So, what are we dealing with right now? Let me just give you just a quick sneak peek at what I'm looking at as far as managing positions right now. What this Thursday, what I call the macro market deep dive every Thursday. We're post Powell pre-payroll. US dollar bullish. We're still in a 90 gas. Crude oil, still one of the best. Crude oil and oil stocks, still one of the best bullish structures in the market anywhere. Still bearish silver, still bearish the 10-year. We've been making a significant shift over the course of the last week to focus less on the long bond and more on the 10. What will the taper and the monetary policy shift due to real yields? And what does that mean for gold? I'm actually kind of bullish. We don't have a setup yet, but we definitely have sort of the macro wheels turning to set that up. So there's a lot of very interesting things going on. And then, look, what is your foundation for November? It is October, right? The previous day is your foundation for the upcoming day, the previous week for the upcoming week, the previous month for the upcoming month. All that legwork, trend research, watch list building, is basically what maps to, what we'll see going forward. So in the current blog, if you haven't checked that out, jump on over there, maybe after the close, and check it out. Ups and downs. And I think the downs are really important to emphasize as well. What were the misses? What were the things we could have done better? I say luckily, I mean, luck has nothing to do with it, but luckily November is set up really nicely from October, because there are some really great trends that ended up organizing in October. And we're going to continue to take advantage of them here in November. So check that blog post out over at countdowntrader.com. What went well in October, what went well in November. Now, September and October have been excellent months. Why? Not because the overall markets are heading higher, but because as you all have been getting from these Charts and Coffee episodes, where are those bullish corners of the market? How can we prioritize uptrends and find where we have the best structure? So, I love the first question, Michael, as a leadoff. XLF, XLE, love where you're looking. XLE and Fuego. I would love to see a pullback, though, in oil stocks. Yesterday, we saw a pullback in oil. And look, I don't know if we're going to hit new highs or not. I don't care. We shouldn't have to. Let me not be so. Do I care? I really don't. However, the reason I can sit here and say I don't care if we hit new highs is that we bought the pullback yesterday. Now, I wasn't that aggressive on the pullback because the range of crude was pushing the historical volatility, and it makes sense to be a little bit more prudent in those situations. But crude did set up a buy. We bought it. And, I was joking with the group. I said, look, the crash in crude, we haven't seen these lows since last Thursday. I like to buy those dips. Why? Not because I'm just buying weakness arbitrarily, but because structure before strategy. And, we probably will consider maybe scaling out of some of those lots, those long USO calls today. Some of you are in long USO calls as well as long crude oil like myself. Love it. And we'll see if we can retest some of the previous highs. But none of this trade is really built on the assumption that we'll hit new highs. Now, how does that affect XLE? Well, if XLE can hit the 21, I do have my eye on XLE OIH, which we went ahead. Now, let me mention this. In some of these instances, I'm going with individual names, not the broader ETF, not, as I like to say, the tide. So for those of you that are not familiar with the boats and tide, I worked on the water for most of college, and I was a dive master on a dive boat. And whenever we'd tie up the boats after a day of diving, you had to think about the tide when you're setting up a spring line at the dock, because you've got to account for, right, the tides. You got to account for how much the boat's going to sink and rise with the falling and rising of the tide. Well, the boat's affected by the tide, hence boats and tide. The stocks within the ETF are affected by the tide being that larger force. The tide here is not just the sector that the stock would be involved in, it's also the underlying commodity. So, in many ways, you've got USO and XLE, USO and XOP. So, I like the long. It's just I might be a little bit more tactical, Michael, about the specific dips. XLF is great, but I will say, and most of you know, we're trading KRE. Why? The structure was better. The structure was better. And you look, what I did not anticipate, nor did we need, but I didn't want to bet against it necessarily, was if small caps continue to move higher, and they seem to be, then KRE, which is more attached to, say, the IWM, the RTY futures, as opposed to XLF, which is more attached to the S&P and the Dow, we went with the KRE. But I would say at this point, you can go either way, and XLF might give us a better opportunity to get long because it hasn't gone parabolic like KRE has. So I like financials very much. Michael, if you've been following the show for any length of time, and I know you have, and thanks for the question, you know that we've been saying that the current environment, based on what the Federal Reserve wants to communicate, is bullish for bank stocks. So there you go. I want to buy dips. It's really that simple. When we have a double green environment, I want to buy dips. And it sounds easy, right? It sounds easy. Everyone says, oh, buy the dip. And it becomes this sort of meme, right? It kind of becomes a joke. But the truth of the matter is, it's the best way to play a trend. It may not always be the way we can play a trend, but it's the best way to play the trend. So while traders oftentimes may start paying attention to a market moving higher, my answer is always going to be the same. There's nothing I can do here. There's nothing I can do because, frankly, the train has left the station. So I love the XLF conversation. I love the XLE, Michael. Really good timing on potentially our being able to buy a dip. So good stuff. All right, next up, Tom asks, as a simpler trading member, what is the recommended way of getting auto chartist? Chart Viper. So Tom, Chart Viper that's chartviper.com. If you head on over to chartviper.com, you'll notice at the bottom of the page, there's a link specifically for simpler folks. It's half off what they charge. We don't get anything, right? This is not something where, I pay for this like everybody else. And I'm happy to. It's $145 a year. So check out chartviper.com. I think we might need a code or something, but I don't remember. If you do, just hit up support or myself or Lorna when we're in one of the rooms, and we'll give you the secret handshake password for that half off for the year. Thanks for the question. All right. Next question is random question. What made me switch from the 1 to 2 time frame for day trading? Kimberly, what made me, Kimberly, I've been looking at, oh gosh, ready? 1, 2, 3, 5, 15, 13 for a little while. 15, 30, 60, 120, 180, 240 daily, weekly, throughout most of my career. And, a lot of it has to do with the structure. A lot of it has to do with the signals. I just found, and this is where the slight tweaks, like, for example, we did the day trading class in 2020. We did a day trading class in 2021. And while the strategies are still the same strategies I've used day trading since the mid-90s, they're tweaked a little bit, whether it's dealing with volatility, whether it's dealing with the evolving nature of trends. I'll give you an example. Back in the 90s, I wrote my second book in the early 2000s. So that would have been reflecting the experience that I had preceding that. And we had a lot of markets at consolidated and then exploded higher or lower, consolidated and broke out. And that was the nature of the market. That was the nature of oftentimes how trends began. Now we seldom see that. We seldom see prolonged periods of consolidation. So usually it's just an adjustment to what I see and what's working best for the signals. One was a little too twitchy, and so I slowed everything down with the two, right? And I'll kind of toggle between 1, 2, 3, and I have for the past 3.5 decades. So thank you for the question. Tim, good morning, Tim. What is my greedy bastard target for KRE? Yeah, we got a lot of members in the mastery asking about that. Heck, this was a trade I sent out in the options room. And you know, there's that old saying, Tim, and I think a lot of you have probably heard of it too. When your enemy is making a mistake, let them. Well, if a market's doing what you want it to do, let it. However, you're right. We don't have a T2. It probably makes sense. Here we are at the 75 handle. I'll probably send out a T2 for the mastery on this trade. And with that, we'll also consider a trailing. Now, the trailing is going to come from volatility. And I will very likely take a look at the expected and at the daily price movement range for KRE and look at how far back we need to be. Because at this point, this is the 38 special school of trade management. Hold on loosely, but don't let go. All right. So thank you for the question. And if you've exited half already, awesome, Tim. That's a monster trade for us at this point. Learn about what are we, 2x at that on that one? I don't remember. But anyways, yeah, if you've already gotten out of half, be at a break even, and we'll just see how much higher is high, because we're reaching some nosebleed levels at this point, these are good problems to have. I think we're through. Oh, Lornabot says we're 3x now, so definitely a break even stop on that one, and a trailing would be absolutely merited. All right, moving on to the next question. Thank you, Tim, for that. Do I have thoughts on Walmart? Well, if I'm looking at Walmart, I'm still going to think about the broader implication of of course, the structure of Walmart, and then where Walmart is in the bigger picture of sector index. So right now, for me, Walmart is a wait and watch for sure. 3A exponential propulsion dots lit up. So we've got that very short-term single-digit exponential moving average cross that's in effect. We just went double green, as you can see here. Yeah, we just went double green on the JT multi. I'd keep an eye on it. Not quite for me ready for showtime, but Mark, let's put it on the watch list. I completely agree. The better quality our watch list is, the better quality our trades. And as I like to remind everybody, including myself, 80% of our time should be spent watch list building, not trading. What we trade is more important than how we trade it. So, direction aside, what we trade is far more important than how we trade it. All right, next up is, hey there, Stanley. Thank you for, oh, my pleasure, my pleasure. I'm drinking some coffee. I get to talk about the markets, answer some cool questions. I can't complain. It's a good life. What's my opinion about the Qs? Is it a short here? Stanley, this is an easy one. No. You want to short something involving the Qs, XLC, Facebook, double reds and XLC, and then relatedly, say another tier down, telecommunications. Please, 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 please. I need to learn to say please in 5 different languages. Please and thank you. The thank you part I got covered. Please, por favor, do not short double green. What's the logic? It's gone too high. We could have said that for the past, please, we could have said that for the past 2 weeks. I see people shorting these strong trends, and it just sort of breaks my heart. I feel like I failed them when We have green grab candles, color coded. We have the JT multi, again, color coded. And some little voice in the back of our head goes, it's gone too high. That's the same little voice in the back of our head that wants to destroy our account. It might work from time to time, but it's the low probability, top picking, sort of thought that we can't indulge. It might be right from time to time, but the probability is really low. And then be honest with yourself. Why this high? It might ultimately be, but it's low probability. So please, 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 no. However, because we can go index sector stock, if you said ROG for XLC, I'm far more game for that. At least the logic of the downtrend, the confirmation is there. So I would say Facebook, XLC. I hope that helps, Stanley. Please, please don't short up trends. All right. So David asks emphatically, where did I buy crude? Sure. So you know what I'll do? I'll show you how we do this. All right. I'll show you how we do this. Here you go. Timestamps are everything, aren't they? I'm a big fan of the way that we are able to alert our alerts, our trades here at Simpler, because timestamps are everything. You've got to have a little bit of time to see the trade, set up the trade, determine position size, which is the same as saying determine risk. There you go. All right, I'll leave that right there. That is how we traded crude. Now, notice the trigger is crude oil. So if you want to trade crude oil futures, there you go. You want to trade the USO call, which is, I've got a little bit of both. Our futures folks will grab CL or MCL. My sector secrets mastery folks, the sector gang will grab the 56 calls, and that's how we do it. So I hope that helps. All right, next up, no worries, David, no worries. All right, Airbnb. Okay, I have no skin in the game on Airbnb. I do like to be aware of mentioning that, because look, if I have skin in the game, like I have in a number of the questions you all have asked, cool, because I think it matters if I'm just analyzing something or if I actually have some skin in the game, because look, the analysis is different. The intensity is different. So I don't have any skin in the game in Airbnb, but generally speaking, I would say that if we revisit the wave and or the 200 exponential by way of the prop dots I have here, I would be a buyer. I would focus on the long side on Airbnb, 100%. I'd hope that we're not focusing on shorts, but rather, and that would only be from the range highs, if you want to view this as a range, as it quite frankly has been since the 19th. But I would say stick with the trend that was, right? Respect the direction that we were heading before we lost the double green. I would stick with the long side. All right, next up is, let me grab the next question. What time am I in the sector room? Oh, sure, Jeff. So on every Wednesday, I'm in the room from the bell for about 2 hours. So 9:30 to 11:30, I'm on the mic. But I'm in the room every day. So when I say I'm in the room, there's two ways any of us moderators are in the room. Either we're on the mic or we're in the chat. So I'm in the chat 5 days a week. If I'm trading, I've got the room open. I've got it open right now. We're talking about, we're talking about managing our winner and URA already, talking about managing our USO long. So I'm in that room all the time. But on Wednesdays, I'm in there for our trading. And then we have a Q&A session, kind of an Ask Me Anything session, technical support, just general questions we do on Friday. So really twice a week, but the main weekly session is on Wednesday. All right. So IEF. So that's really your ZN, right? Love the question, Nikolai. Love it. So yeah, I like IEF. In fact, we have an alert out for it. Watching ZN, which is your more 24-hour-ish look at the 10-year. 10-year is far better than the 30. Let's keep an eye on IEF over TLT. So kind of I have a big X over TLT now. Manage the trade. The last trade just didn't do what I hoped. Took a small paper cut on that. Didn't even hit the threshold, but it was still a small loss. It happens. And that was a time-based, let's get out now, hit the eject button. But going forward, we're refocusing on IEF. So awesome, Nikolai. Yes, I would want to focus on buying puts in the rip. All right, buying puts in the rip. And that's the momentum we want to capitalize on. All right, gang, just like that. Gosh, where did that 20 minutes go? Holy cow, that was fast. So thank you as always for the questions. Thanks for being here for Charts and Coffee. And I will see you all tomorrow, same time, same station. Be good to each other, gang. Remember, we're in between that Powell to non-farm payroll window. Tomorrow is NFP at 8:30. So keep that in mind, because jobs are sort of that fifth pillar right now for the Federal Reserve, since their mandate is both inflation, like all the other central banks, G7, G8, but jobs, that's that dual mandate that this Federal Reserve has. All right, gang, I'll talk with you soon.